All right, Vlad, welcome to the video.
Happy to be here. Thanks for the invitation.
Absolutely. So a lot of big news came through for FTX creditors, customers. We finally have some concrete numbers, or at least a good idea.
Finally, we've seen a couple of plans and disclosure statements with a lot of blanks previously.
Talk to me about what you're seeing, what your thoughts are.
Well, I would say that because of all the communication from the professionals to the public through the docket, through various monthly operating reports and creditor presentations, it's been pretty apparent to anyone looking at the detailed data that this plan was going to provide for payment in full. And full, of course, is kind of a loaded term for crypto people because it means as of the November 2022 crypto to fiat conversion prices. We thought there would be a good shot at an interest rate on top of 100 cents. One of the challenges is that the terms of service for FTX account holders did not provide for any interest. So we weren't really sure what that interest rate would be. The general rule in bankruptcy is in absence of a stated rate of interest if the debtor is solvent, so if there's more than enough to pay creditors in 100-cent dollars, the interest rate is usually the federal judgment rate, which right now is around 4.5% or 5%. I'd say the biggest surprise was the very high interest rate, which is a 9% interest rate per annum. So for a 2-year case, let's assume November 2024 exit, that would be 18 points of interest, not counting any compounding. So I'd say the high interest rate was definitely a positive surprise. Also, there's this unique excess recovery. The mechanism of that is that the various government entities, such as the CFTC, the SEC, the IRS, to an extent, the DOJ, they have been in discussions with FTX about doing two things. Number one, subordinating their claims to the claims of account holders. So these government entities would be in second position, number one. And number two, there's also discussions about any recoveries that the government entities receive on account of their subordinated unsecured claims would be turned over to customers, including Alameda creditors pro rata. So that's how you get from a 118 basic par plus accrued interest recovery up into a range of 127 to 142, so in the upper 120s to 140. So that increment above 118 is the estimated value of the government claims being subordinated and turning over recoveries. So that was definitely a surprise. We've never seen that before in any bankruptcy. There was something slightly like that in Madoff, where the Department of Justice collected a $3.5 billion fine from JP Morgan and turned over those proceeds to victims. But that was done around the bankruptcy process. It wasn't part of the plan process itself. And of course, Madoff recoveries are very far from 100 cents. So those are the main surprises for us. I'd say an additional surprise is we weren't sure how Alameda claims would be treated. I think versus market expectations, Alameda claims have been a huge winner. So for example, if you look at the way Cherokee's Claims-Market was quoting the bid ask of regular larger over $1 million customer claims. Pre-news, we were quoting the bid at 95, ask at 99, post-news, 101 bid, 110 ask. So the bid side went up about 6 points from 95 to 101. If you look at how we were quoting Alameda, which isn't really that liquid. There's not much Alameda trading, but the bid side of Alameda pre-news was quoted 63 cents, and post-plan we were quoting at 98 cents. So that's a 35-point or in excess of 50% of the previous number. So I think Alameda, huge beneficiary, non-account holder, unsecured claims, huge beneficiaries.
So a couple surprises, right? The post-petition interest being higher than what you thought it was going to be, which does benefit everybody. It benefits every single customer, yourself, people that were buying claims, even people that held on to their claims. It's more than we thought.
Yeah, absolutely. Continuing on that, I think that's also one of the vulnerabilities of the plan. And after all, a plan is just a plan. I mean, this is a plan that's although it's carefully researched and it's been months in development, it is a plan of the debtor with the support of the ad hoc committee, which is about a $4 billion committee, mostly composed of hedge funds that have been buying FTX claims. There are many other parties in interest that can object to this plan. The 9% interest rate, certainly very, very high. Again, not supported by a contractual rate in the terms of service. So there's vulnerability to that being knocked down. I think Sullivan and Cromwell kind of jumped the gun by quantifying the benefit of government claims subordination and turnover to creditors, because there is no deal yet and there's no real visibility on how close they are, what's preventing the government entities from finally agreeing to something. So I think there's some risk there.
So it's not locked in. These percentages are not 100% locked in, but they're saying it is. Essentially, they're saying that this is what we project. Is that how you see it?
Yes. So I think using the term locked in, I think 100 cents in cash based on the November 2022, values, I think that's locked in. I think some sort of interest rate with the baseline being the federal judgment rate. Let's round that up to 5%. So let's say a 110 terminal recovery. I'd say that's fairly well locked in. Beyond 110, I think there's some risk to the interest rate. It's hard to tell what government entities will do, especially because they're all executive branch entities, more or less. DOJ certainly is. The IRS, certainly is. The commissions generally bipartisan, but usually the chairs are appointed by the executive branch. So they're either executive entities or executive branch quasi-controlled entities. There is still a war on crypto, so it's unclear what they're going to do.
Yeah, let's talk about some of the issues that, I'm hearing a lot of people talk about issues with this plan. You don't cash your claim in 6 months, you basically get zero. Your claim is expunged. At least that's how I understood it.
They've weaponized KYC in this case. I think I made that point when we last spoke. They're very, very serious about KYC. It's a matter of compliance with U.S. anti-money laundering rules. So I don't see any wiggle room on that. So essentially, if people have a problem with it, a creditor would object on the grounds that we don't agree with your interpretation of the Patriot Act or U.S. anti-money laundering rules, trying to protect the world against terrorist finance. I don't see those objections going anywhere. I'm sure they will be made, but I don't think they're going to go anywhere. In terms of tax withholding, similar to the KYC issue, it's really a matter of compliance with U.S. income tax law and regulations. So I don't really see those objections going that far either. One of the problems that you get in these cases is if you're in a commercial relationship and a vendor is speaking to a customer and the customer tells them, well, we really want your products, please ship to us, but we're going to have to withhold. And let's say there's some fuzziness about, whether withholding is actually required because it might not be very clear, or let's say it is clear that it's required, but the actual rate isn't completely clear. There's different ways of interpreting it. Well, if the vendor doesn't like the answer they get, they can try to go to another customer, assuming that they're product constrained. Here, there's no place to go. If you're a creditor, you're essentially at the mercy of FTX and its professionals, and bankruptcy professionals on these types of government regulation compliance issues. They tend to err on the side of conservatism. It's a really tough uphill battle to ask a judge to rule against a debtor professional on the grounds that they're being too conservative.
So let's talk about maybe your thoughts on the timeline of when creditors, I guess you get the convenience class, so the creditors that have a $50,000 or less claim, and then you have the over $50,000 claims. Do you think this will be finished by the end of the year and people will get their distribution? And then for people with larger claims, how long do you think it'll take?
I think there's two different parts, two different answers, sort of a two-part answer to your question. Aaron, first of all, no unsecured creditors can receive any distributions until the plan is confirmed and goes effective. So, for example, you can have a confirmation hearing in September, but there might be conditions to effectiveness of that plan. There could be regulatory approvals that are required that could take several months. So I'm still thinking somewhere around year end, let's say December, being an actual effective date for the plan. Now, what they're doing, what the proposed treatment is for convenience class creditors, which is any creditor who's either less than $50,000 or that voluntarily elects to reduce their claim for distribution purposes to 50,000. So if you have like 52,000 and you check the box in the ballot, then you'll be treated as a 50,000. One benefit that they're giving to those creditors is that they'll make a distribution of everything that's owed. Let's say the 9% per annum interest rate is ultimately part of the confirmed plan. And let's say the effective date occurs in December. So a convenience class creditor will receive one lump sum distribution of 118. In exchange for that benefit of getting everything in one lump sum, they're giving up any upside from government claim, subordination, and turnover. So that's the deal for convenience class. For non-convenience class creditors, let's say the effective date is December, there would be a first of several distributions made. We don't know what the amount of that first distribution is. It depends on assets that are available and also judgments that are made by debtor professionals and potentially a liquidation committee as to what type of reserves need to be retained by FTX. But off the top of my head, I'd say probably somewhere maybe around 80 or 90 cents in the first distribution, and then several distributions thereafter. As a matter of fact, the disclosure statement also has a provision for a rolling record date, which also assumes multiple distributions, probably more than two, probably three or more distributions. And they don't really go into the frequency. In the case of Lehman, they were semi-annual. So if the first distribution is made in December of 24, the second one might be June of 25.
Two questions. One, do you know how you will vote? And secondly, can people still sell their claims? I guess you mentioned the rolling date. Is that what you mean by that? Like people will be able to sell their claims possibly even after the first distribution? Or how does that work for claims and people that want to sell?
I do like the plan. The biggest problem creditors have with the plan, where they have a shot at winning, is the whole concept of creditor property. Why are they being commingled? Why are there assets that, according to the terms of service, remained in their name? Why are they not being returned to them, sort of analogous to a Celsius custody class? There is an organized group led by Sunil, who's very active in social media. I think they have over 800 million of creditors that have signed on to support Sunil. I believe they intend to vote against the plan. I think they have quite a bit less than a 50% chance of winning, but there's some good arguments there. We've chosen to support the plan. So we here at Cherokee intend to vote the claims that we own for the plan. One point of clarification. So Cherokee owns Claims-Market. Claims-Market is a marketplace where we match a single seller one at a time. We match one seller with multiple competing buyers that compete to offer each seller the best price in a rapid closing. So we're essentially running a marketplace. And in general, we do that for all claims above a few $100,000. So we're acting as a broker in a very transparent market. For smaller claims, usually under 100,000, we're buying those for ourselves. So we do have a position that we've accumulated over the last year and a half, but they're essentially smaller claims that are difficult to market to hedge fund buyers. In terms of being able to sell a claim, well, again, if you have a convenience class claim, 50,000 or less, I think you'll be able to sell it at any point up until that approximately that first distribution. And then the creditor will receive 100 cents plus interest. Let's say that's, 18 points. So if the creditor receives 118, that's it. They get one lump sum and there's no more claim to trade. For non-convenience class creditors, let's say you have a $1 million claim, and let's say the first distribution is 80%. So in December, that creditor will receive $800,000, and they'll be left with what we call a stub claim. So a claim that's entitled to subsequent distributions. So let's say those are trading for, let's say, pick a number, maybe 105. So that $1 million claim, that will have a value of the 105 minus the 80 the creditor received. So that claim will have 25 points of remaining value. So if that creditor wants to sell their claim after December of 2024, when they get 80 cents, they should be able to sell it for 25 cents. I have some thoughts about the Sunil argument, just to keep it more straightforward for your audience. If you had crypto in your account as of November of 2022, when FTX filed bankruptcy, the terms of service, they make it clear it's your property. You should be able to get that back. But there's one legal concept that sort of muddies the water on property interest, and that is when assets are co-mingled and misappropriated. Take an extreme case. Let's say there was some type of coin that you held, and once you deposited that coin into your account, what FTX did is they sold everything. And to take a simplistic example, if they sold everything for cash or stablecoins, then they can't return. I mean, they can always go into the open market, of course, but they can't return your property because they basically misappropriated your property. It makes it much harder to return something that's been sold or swapped or exchanged into a different asset. Then there's the issue of co-mingling. So if you have an ownership right in one asset, if it's, and I think you may recall these arguments from Celsius as well. So in the custody account, it was more segregated. If you have two assets that are the property of third-party creditors and they're not segregated, they're commingled with other assets, let's say at Alameda, so from FTX lent to Alameda, and then commingled with assets that are not the property of customers, that commingling makes it more vague and less clear about really which coin belongs to a customer, which coin belongs to Alameda. And that chips away at that argument. So those are just classic legal principles of trying to track property rights when they're commingled. Another more practical issue is, let's say you held Bitcoin up until a few days before the bankruptcy, and you were just you were a committed long-term investor in Bitcoin, but you couldn't withdraw your Bitcoin. You were freaking out. There's all sorts of like alarm bells, bad information, bad news in the market, and you just sold within the FTX exchange. You sold your Bitcoin for fiat dollars, and only because you thought that might make it more likely for you to withdraw your assets. Then they file bankruptcy, and now you don't have the benefit of any Bitcoin appreciation because you made that decision to sell, even though you were a committed long-term holder. Versus, let's say there was someone who was just a trader, and they had no long-term commitment to Bitcoin. They just happened to have a predominantly Bitcoin position as of the petition date. And let's just pretend that they actually had a plan. They had sort of a trading diary, and their plan was to, sell Bitcoin right after November 11th. They just had they might have even written some code, hypothetically. They were going to sell Bitcoin for cash on November 12th. But on the petition date, they had a lot of Bitcoin. So it seems just unfair to sort of in a Monday morning quarterback style to give appreciation rights to people just because of what they owned on one day. And there's no way to know what they would have done day 2, month 2, or year 2. And obviously, FTX, before it suspended withdrawals, you could trade freely. Like you could constantly change your positions, and to have a disproportionate benefit determined just at one point in time seems pretty unfair. If you happen to have a lot of Bitcoin on November 11th, it's great. You're fighting for it. You want that. But if for whatever reason you didn't, then if those objectors, if they were to get what they're asking for, it's essentially a value transfer away from fiat and stablecoin creditors as of November 11th, 2022, to those more crypto heavy. And it seems, on the one hand, somewhat arbitrary. It also seems a lot of Monday morning quarterbacking. And it's essentially a value transfer because there's a finite amount of value within the whole FTX system. So other than professional fees, which is a separate topic, but after professional fees have been paid, every dollar that FTX has is being distributed to creditors pursuant to a waterfall. So the more money allocated to a crypto heavy account, that's less. It's a zero-sum game. Like every dollar more that that particular type of creditor receives, those are less dollars for everyone else.
That makes sense. Yeah, I mean, people are fighting for their best interests usually at the end of the day, and that's just, yeah, it's creditor versus creditor, and that we even saw that.
It's really creditor versus creditor. I mean, there's no FTX company per se. Like after professional fees, everything gets distributed to creditors.
We saw that with Celsius too. It got very ugly with different creditor groups fighting against each other, and there's a fixed amount. So we'll see what happens with that. But I'm sure, everyone has a right to object to what they want to object with, and
sure.
People
can object, and people can vote no. And just for your audience, there's a very clear 2-pronged voting threshold in bankruptcy. So in order to confirm a plan, creditors need to vote for that plan that have at least 2/3 of the dollar amount of votes and over 1/2 the number of claims. In this case, there are 1.8 million creditors, and what's voted is the number of people who vote. Mm-hmm. So there are 1.8 million creditors. I'm going to pick a number. If 1.0 million vote, then over 500,000 yes votes need to be tabulated in order to confirm the plan. 500,001 no votes is enough to block the plan from the numerosity standpoint. Mm-hmm. So I think it's a pretty fair system. All creditors will have their day in court, whether they choose to object to the plan on legal grounds or simply vote their ballots against the plan.
If I had to guess, it'll go through based upon what we saw happen with Celsius.
I think you're right. I think what happens is even people who don't like what's happening, when they have that ballot in front of them and the vote's due tomorrow, they want their money. And I believe something like 97% of creditors are convenience class, and they're getting, let's say, the 118 in one lump sum. I think they'll be, no matter how they feel, I think when they're looking at that ballot and it's just them in the ballot, I think they're probably going to end up checking the yes box because they want that 118. They want that money.
I agree. And I don't know the exact numbers, but I believe a lot of the claims were held in stablecoins too. A lot of that
That's
value.
Right. I mean, I don't have the breakdown, but predominantly most creditors were, as of the November 11th, 2022 petition date, they were in stables or fiat. And again, a lot of that, I don't have the data in front of me. I'm not sure if it's been released or not, but a lot of that outcome is as a result of nervous creditors trying to withdraw crypto, being unable to withdraw crypto. Markets were cratering. So they made, from a price risk management standpoint and also from a probability of what they perceive to be a higher probability of withdrawal, they traded out of crypto into stables and fiat. That was a short-term decision.
They're getting 9% on their dollars, which is better than anyone else has
gotten. That's pretty good too. Yeah.
Yeah. I wish I got 9% on my, dollars over the last 2 years. Anything else you want to share, or are you feeling complete?
I think that's it. I think we've seen in Celsius, Aaron, how much the actual effective date of a plan can be delayed for a lot of behind the scenes reasons. Many of them are driven by regulators insisting that every I is dotted, every T is crossed. They're like a convoy. There's a whole constellation of regulators, and you need every single one to sign off in order for distributions to be made. And I think that process resulted in months of delay in Celsius. I would expect the same thing to happen here, which is why I think one of the risk factors highlighted in the disclosure statement is that there could be a substantial period of time until the plan is confirmed, goes effective, and the first distribution is actually made.
Well, let's finish off with how people can get in touch with you if they want to, or if they want or are curious about just selling their claim or inquiring about that. What's the best way for people to reach out to you and your team?
Absolutely. I mean, probably the best thing is just send an email to all@CherokeeACQ.com. If you do email us, please include your 8-digit customer code. That will greatly facilitate the whole process of us reviewing your claim and coming back to you with a quote. We are active on social media. I think there's a 9-part synopsis of this plan and disclosure statement that we posted to LinkedIn as well as X, FKA Twitter. You can always DM me on Twitter or just simply reply to any of our posts, and we monitor social media, and we'll reply quickly.
Thanks for coming on the show and sharing your thoughts on the FTX plan.
Aaron, my pleasure. I really appreciate it.